When should I start?
What's that?
When should I start?
Whenever you are ready to start, I'm ready to listen.
Okay. The affirmative supports the solution that U.S. should adopt a tax system with a constant rate of taxation, sometimes referred to as a flat tax. First, we like to define some terms. Tax rate, the percentage or ratio at which someone is taxed. Flat tax, the complete elimination of credits, deductions, exemptions, and graduated rates based on income in favor of just one rate. Tax expenditure, revenue losses attributed to tax provisions. Investment, the outlay of money usually for income. Investing, process of exchanging income for asset that is expected to produce earnings at a later time. Therefore, we find income as wages you earn from working and investments. And fair, the treating people in a way that does not favor some over others. So, our significance claim is that the current U.S. tax code is a drain on the economy, deterrent to growth, too complicated, inadequate, and expensive and unfair. So our first point is that it's a drain on the economy. High marginal tax rates discourage productivity, slowing the rise of wages and economic growth, and make it difficult for businesses to compete globally. Tax rate is a deterrent, not an incentive, according to Niels Veldhuis, senior economist with the Fraser Institute, an independent, nonpartisan research and educational organization based in Canada. What you're telling them is the more successful you become, the more and more we're going to penalize you, he says, by a higher tax rate. America's corporate tax is also the highest in the developed world. A tax expert at the Congressional Research Service recently testified that U.S. corporations are reporting profits in Bermuda, a tax haven with no corporate income tax that is likely to exceed the country's GDP by as much as 1,000%. The report also noted that 18,000 companies claim to be headquartered in a single 5-story building in Cayman Islands. Our second claim is that it's too complicated. The income tax inflicts multitude of rules and exemptions that lack transparency and fairness. According to the Taxpayer Advocate Service, an independent group within the Internal Revenue Service report to Congress, Americans spend 6.1 billion hours preparing their tax forms. The IRS has 1,175 forms and instructions listed on its website, and the majority of Americans do not complete their own taxes and require specialists to do it for them. Even the former IRS Commissioner, Doug Shulman, has said, "I find the tax code so complex that so I use a preparer." Our third point is that it's inadequate and for damaging tax expenditures. Tax expenditures projected to a total of staggering $1.4 trillion this year alone, more than we are projected to spend on Social Security, Medicare, Medicaid, or national defense. The current tax code is unable to bring in revenue needed because of tax loopholes and deductions, and as a result, the tax rate has to be higher to make up for it. Our fourth point is that it's expensive for regular Americans and expensive for the government. According to the White House Observatory Board, independently reports to the White House, Americans spend $140 billion a year to comply with the building figments of the federal tax code. As an example, H&R Block alone has over $3 billion in profits just from preparing tax codes every year. That's an average over 2012 and 2013. Also, the government spends $1.3 trillion per year offering certain types of rates according to the Tax Policy Center. Well-effective tax rates are a product of unfair tax loopholes, many of which encourage companies to take excessive risks and to shift jobs and profits offshore, which costs the government tens of billions of dollars more each year in tax revenue. There's also costs incurred by the IRS itself in taxpayer services and enforcement. In 2012 and 2013, they spent $2.4 and $2.3 million respectively doing taxpayer assistance and education to help people understand the code, and then enforcing the complex tax code, seeing if they applied to all these deductions and other things that make the tax code more complex. They spent $5.3 million in 2012 and $4.9 in 2013. Our fifth point is that the current U.S. tax code is unfair. Not everyone pays the same tax percentage due to progressive tax system and loopholes and deductions. Nearly 70% of Americans say that they think the current tax code is unfair and benefits the rich, according to a CNN poll. An example of this is Republican frontrunner Mitt Romney paid 13.9% tax rate in 2010, which is far lower than most middle-class Americans, in part because he earned most of his income from investments and numerous deductions. Another tax rate that benefits the wealthy more than others is the mortgage deduction. Homeowners that earn $250,000 per year save an average of $5,000 in taxes by claiming mortgage deduction, 10 times more than an average homeowner that earns $40,000 to $75,000 per year. And renters save nothing due to this deduction, and 35% of the nation are renters, which are mainly low-income people. The current tax system tilts the balance in favor of taxpayers with the means to hire lawyers and accountants who can actually do their taxes and find deductions and tax rates for them. But people who can't afford this just have to deal with it. They can't do it themselves. According to IRS, average effective federal income tax for the 400 wealthiest taxpayers is only $19.99 19.9% 2009, less than the rate paid by many middle-class families, and just our inherency claim is that the current U.S. tax code is unable to be fixed due to lack of political will, lack of public will, and because it's a progressive tax code. There's a lack of political will and public support to fix the current U.S. tax code. Congress has been trying to enact tax reform for years but can't come to agreement. They seem to agree on the same general things but are unable to pass a law that seems to fix it. So if they're suggesting that we can fix it, why suddenly now we'll be able to do it? According to Gallup, 15% of Americans approve the way Congress is handling its job, and when asked if the way Congress handles tax issues made them more optimistic, less optimistic, so they had no effect on them, 51% said it made them less optimistic, and 24% said it had no effect. Also, they can't reform the tax code to make it better because it's a progressive tax code, where the definition of progressive tax code is where the tax rate increases as the taxable base amount increases. So not everyone is still going to be taxed at the same rate, and it's still going to be unfair, and any plan that doesn't include the complete elimination of deductions is still going to be expensive for Americans and the government, and they're still going to have to hire people to do their taxes. Our solvency claim is that flat tax will be far less complicated, and incentives to growth far less expensive and much more fair. So it's less complicated for the government and for regular people. One tax rate makes it easier for easy computation by the Internal Revenue Service, IRS, and straightforward payments from taxpayers. It's easier to understand the report, and for regular Americans it means there's no need to hire somebody to do your taxes. Everyone pays one flat rate, so there's not as greater need to investigate all this to make sure people are complying with the deductions, they're claiming dependents that actually exist. So there's either you paid or you didn't. The money people save from this will be, the money people and companies save from this will be invested back into the economy. According to the Heritage Foundation, a flat tax means higher wages and more competitive companies through increased private investment. And by having a tax system that doesn't penalize people for making more money by taxing them more, it's an incentive for people to work harder. A flat tax will also result in economic growth. Since 1940, approximately 38 countries have adopted a flat tax. 17 foreign countries, mainly in Eastern Europe, have adopted a flat tax since 1994. Every nation in the 17 that instituted a flat tax saw their economies grow by approximately 8% in a single year, and that's double the average percent from 2011 to 2013 in the US. After instituting a flat tax from 2001 to 2007, Estonia grew by an average of 9% per year. In 2003, its unemployment rate was 12%, and just 5 years later it was 4.5%. And Estonia also has 63% of its population has access to the internet, which is also high above the world average, which suggests increased private investment in infrastructure. The tax system does not discriminate based on income level, so everyone pays the same percent of income. And it also depoliticizes the tax code, because legislators can't give preference to the penalties to firms and industries they look on their favorite rate of things.